All right, so I'm just gonna go over this trade. Here up here, your market went up, and this is just uh, basic support resistance trading. It's nothing. That's all. I mean, there are different setups, and you hear a lot of setups, but the most basic of them is just support and resistance. And then a type of support and resistance trade is the spring and the upthrust. Um, that's all really it is. It's a type of support resistance trade where it fails to follow through. Anyway, so you have this market go up, market went down, spring position, went back up here, ping ponging. As you can see, trade here, trade there, whatever, right? And when it comes over here, this part gets very interesting. So on that hourly chart, you have upthrust position. Now take a look at the 5-minute chart and see what's going on. So what's going on? As it goes into the upthrust position, you have all this volume. Some may say it looks like a breakout, right? So here's the thing. If you have all this volume on this up wave, how come the wave after that broke the low? How come all this buying broke? Well, that's what happened. You had all this buying, will put the market in an upthrust position. Also potential breakout. You don't know which one's going to, win. But after that, you have a break. When it broke, when it was in an upthrust position, it broke. Look at the bars that reversed. They're very wide range. It's probably the widest range here, with a follow through bar that broke the low of this climax. So it's telling you that market is not ready to go up higher. So now you have two options. Market is either going to go up or it's going to go down. So when a market is in that position where it takes out the high, it can either break out, absorb, or it can reverse and be an upthrust. This case, it's going down, not up. Why? Because it went into that position, and the selling that came after it was very strong. It took out the low, so clearly it's not in a good position for the bulls. And it took it out with wide-ranging bars. So what the wide-ranging bars means, either the buy orders have been removed, causing price to accelerate downwards, or the selling pressure is so heavy that it absorbs everything on the downside. In either case, it's selling pressure, as indicated by the wide range bar, which is the widest range. I don't know how, probably on all these bars. And after that is follow through. Then, as it comes back up, to look at the speed. This is 2 bars that breaks down. Look at how many bars it took to retrace. So you have 2 bars have more speed than 1, 2, 3, 4, 5 bars on the way up. 2 bars down have more speed than 5 bars on the way up. Clearly, the selling pressure was more than the buying pressure. So you can compare the speed by just counting the number of bars on the down wave versus the up wave. Anyway, and when it came back up, you're gonna notice that it's less volume than the down volume. All right, so less speed, less volume, and less than the prior up volume, which was the climax. Okay. After that, you have selling pressure 133 over here that takes out the low. It makes a low low. And the volume increased. Selling pressure increased. Selling pressure increased. It has this very nice break, this nice big bar over here, which when it was tested, it tested with the smallest amount of volume in 1, 2, 3, 4, and at least 4 up waves. That right there is the point where the market has to go down. Not has to go down, but has to pull back or go down temporarily or whatever. Because this is confirmation that there's no demand. Why is there no demand? Because the market exhausted itself during the climax, and now the buyers are no longer there. The buyers are not willing to buy from these lows. They're no longer there. And they're not there because they tried, well, they exhausted themselves up here. And after that, you met pressure, and now you're on the right-hand side, and it goes down. So as it go down, what is an indication of weakness? When the market goes lower, the volume decreases, the thrust decreases, and the prior upwave actually had more volume than the lowest wave you see here. Lowest wave had 41, the prior wave had 44. So something's not right. And anyway, it just basically went all the way back to test. Where to test? It tested this bar. And from there, it just went down some. I think up to here. That's it. So if you didn't catch it over here, you could have caught it on the retest. It's not a big move, but it is a move nonetheless. So that's the trade. What are the key learnings? Key learnings here is that, one, the climax didn't hold. The climax didn't hold, so how do you know that? That's one of the reasons why it's probably a climax, because it's at the top of all of these waves, and because the low is broken. Some may say this and say it's a breakout. Well, if it's a breakout, why is it that the down wave after it is so much stronger in terms of the range of the bars? It's stronger in terms of the range of the bars. The speed accelerated and took out the low. Still though, what else is in your mind if you're bullish? And this is where it gets tricky. You might be comparing the up volume with the down volume and say, oh, whoa, wait a second. This is 169 and this is 73. Doesn't that mean that this up volume and up wave is stronger than the down wave? Doesn't it mean that because you have more volume up here on the up wave than the down wave that it's bullish? No, it doesn't. Why? Because the length of the down wave is bigger than the length of the up wave. That means that the underlying demand is gone. So less volume can create more distance because the underlying support orders are no longer there. So this is why you have ease of movement to the downside on lesser volume than the up wave, because that lesser volume is able to do more price movement than the prior up wave on more volume. Bottom line, it takes less work to go down more than the amount of work it takes to go up. Less work, more progress on the way down. Why? The support orders are not there. What's else is telling you that? The wide-ranging bars. It's telling you that the support orders are no longer there. All right. So, but what if you still were confused and said, I don't know. The other thing to note here is this 73 is not low. It's low in relative comparison to the climax, but it's not low in relative comparison to the last three down waves. See, it's bigger than 33, 35, and 48. So it's meaningful. Does that mean you just trade like crazy? No, you wait, pull it back, then it goes down here. When it goes down here, it's more volume, makes a lower low, has wide-ranging bars, and that's confirmation. Then it just pulls back a little, and then this is the bar that initiated the markdown, right? Right there. It's a small markdown because why? Because there's no trend in the higher time frame. That's why. So anyway, that's why this markdown is small. What is the bar here that broke the back of the trend? There are different bars. There's one that breaks the trend, and there's the markdown bar. What is the bar that breaks the back of the trend? That bar is this bar. This bar right here. That just breaks the back of the trend. It takes out one, and I think the follow-through bar takes out the next low. So that's important to note. So I've gone over a number of behaviors here, and hopefully that's helpful for you. Thank you. Bye.